Hey, what's going on? Welcome back to the channel. In this video, we're going to be taking a look at Glmr. I do want to say that I'm not a financial advisor. You should do your own research before investing money into crypto. If you haven't seen the previous update, make sure to watch that before watching this one. It's going to be linked in the top right-hand corner of the screen. So let's get into the technical analysis. We are on TradingView. The chart is from Binance. So as you can see, we have our Fibonacci retracement that I've had for the past, I don't know, 5-6 videos probably. So we have this high over here and our swing low is all the way down here. We got our 1.618 target at 41 cents and we gradually made our way down to this target and we almost got to it October 13th. But the wick didn't actually touch the level. So there's still a good chance that we might come back down here and retest the 1.618 and go up from there. Let me just move the price tags to the left side so they don't cover any of the fib levels. So as you can see, we do have a second Fibonacci retracement in the background. You can see this larger one with the teal trend lines. So you can see this one has the 1.618 target all the way down here, which is above us right now. And we plummeted through that level pretty quickly, retested it as resistance and came back down. So on the grand scheme of things, on this larger fib, if I just remove the trend lines here, the price tags to the left side, as you can see, we are below this second fib level as well. You can see here's the second fib level, here's the 1.618, here's the 2.272, and here's the 2.414. So these two levels here of the large fib are still intact. There are still potential support levels we might come down to if we see another capitulation for Bitcoin. And like I always say, Bitcoin is the king. Bitcoin moves the markets and altcoins follow. So if Bitcoin starts dropping, altcoins will have a very bad time and they will have very strong corrections. So we may see Glmr as low as 33 cents before the year ends if we have a correction there. We can also have a correction in January, just like we did this year. So a lot of potential scenarios on play here. You just have to be ready for all of them, right? You have to have some cash on the side and you want to be exposed to the crypto markets. At least that's what I think, because you can have a pump at any time and you can have a dump at any time. So ideally, some people have it 50-50. So 50% in crypto, 50% in cash. And once you take some profits, you wait until the price comes back down and you buy back in. So that's essentially called swing trading. Okay, so you have a nice picture of what are the fib levels here. And if we start zooming in into the smaller fib, because that's what we're going to be working with over here, and you have two red zones above us. So those are resistance zones that we may retest before we have another pullback. As you can see, we wicked all the way to this red zone October 16th, and from there we had a pullback of around about 17%. So that was a very nice 17% potential swing trade for you, because I let you know that this is where we might end up at some point before a pullback. And this was a really quick wick, just like the one we had October 6th. Immediately the next day after I had my Glmr video out on October 5th. And that in itself was a very, very nice, as you can see, after that you went down 22%. And if you bought off the 1.618 here, and I always tell you not to have the buy order exactly at the support level. So for example, here, the 1.618 is at 0.4115. So what I would do is I would place it a bit higher at 4185, 4189. Don't have round numbers and don't have the price at the exact support level. So if you did that, you would have been filled here, okay? And from this point here, you had a 33% move to the upside within 3 days. So that's crazy. That is insane amount of profit during a bear market, guys. 33% is incredible. And if you swing trade this correctly, and you obviously there is some risks involved, the price could continue going up or the price can continue going down, and you don't you can't take profits or you can't buy back in because the price is already too high. So there are factors that you have to consider, but if you do it smartly and you take a look at the RSI and you consider that you have these long wicks, especially on projects with lower caps, then you can take advantage of these small and short-term pumps. That's what I try to do. Now, full disclosure, I don't have any GLMR yet. I know I've said I would start dollar cost averaging after we get below 50 cents, but I still haven't bought into all of the higher cap altcoins that I wanted to. So I'm still filling in my bags with those. And at some point I will probably get to GLMR if we're still below 50 cents. I do have Moonriver though. And out of the two, I prefer Moonriver. And yeah, so that's regarding if I hold these tokens or not. And as you can see, another negative thing to mention here is that we did lose this low that we printed October 1st, September 30th, right? Because you went lower 2 weeks after that. So you lost this low. This is no longer a potential double bottom pattern. This is continuation of the downtrend that we've been in ever since August here, right? August speaking like in a local time frame or in this local area here. Obviously, we've been in a downtrend ever since like January last year, November. So everyone knows that. It's just that we started this little uptrend here with the falling wedge or with the rising wedge. Obviously, we broke down from there and we did trade all of this. I told you guys about this in advance. And if you want to get all of my trade alerts, my low cap gems, exclusive podcasts for Patreons, then feel free to check out the Patreon down below in the description. And yeah, so what we can do now is move over to the daily RSI. And as you can see, I did give you these two levels for the past 2 months. I think I've been targeting these trend lines. And as you can see, we haven't had a test since, when's that? Since August, right? At the end of August, beginning of September, right? You had this back test of support. You ran into the resistance there. And so far, you're trying to break above the yellow resistance trend line. And as you can see, you're doing that for the second time in 10 days. But as you can see, the last time you did that, this was a little fake out and you dropped back down, right back down. And I would be targeting the blue trend line for any sort of capitulation that we might have. That could be an incredible entry point in my opinion. And if I bring out the price action here and I zoom in just a little bit, I want to show you something. So notice how the RSI is constantly printing higher lows. So I'm going to get this path here. There we go. So as you can see, the RSI is constantly printing higher lows. So this low is lower than this one, and this one's higher, and the next one is higher than the previous one. Now, if you go to the price action and you take the same trend line and you drag it down to where the price is right now, you can see that what we're doing is the opposite. We're printing lower lows, right? And this is called a bullish divergence. Now, this bullish divergence is usually there to give us a heads up. Hey guys, potentially we might see a pump on this coin. We might see some sort of a break to the upside. That is always possible. This doesn't guarantee anything. Keep in mind, this doesn't guarantee anything, but more often than not, these bullish divergences are sort of a looking glass for what we potentially could see in the future or in the near future, because this doesn't have to play out immediately. But what you can see right now is that we're holding the 20 EMA as support, and that is very good. As long as we're above the 20 EMA, it's going to keep on coming up. And as we approach the 55 EMA, we're going to be faced with a choice. Do we break down? Do we break to the upside? Because once the price is squeezed in between two levels, there is nowhere to go, but you have to either break up or break to the downside. So I do think if Bitcoin allows us to do that, we're going to break to the upside, because the markets have been oversold for quite a while and everyone's looking for some sort of a relief rally to the upside. GLMR had this little relief rally from June up until July, or the end of July, and we broke down in August here. So not a lot of, fun things happening with GLMR, but for those of you who believe in the project, for those of you who are bullish on the project long term, this is good for you, because the lower the price, the more coins you buy, right? That makes sense. So if you've been buying GLMR at these prices here, above $3, above $5, then right now this is your opportunity to dollar cost average. Now let's switch over to the Binance website. Okay, quickly taking a look at the Binance website. I don't want to take any more of your time. So you can see that we are in a falling wedge and we're breaking out of it right now, which is quite bullish. We did see this wick to the upside. So this was actually due to the fact that we were in the apex of the pattern. So once you get to the apex of the falling wedge, you are faced with a choice like we talked about. You're in between a support and a resistance level. There's not much space to go, so you're forced into a decision. And GLMR decided to break to the upside, and that's good. Now we have multiple resistance levels above us to keep in mind. So you have one level there, you have another level there, and you have another level over there. So these are going to be your resistance levels, okay? So you have this zone over here. What we can do is just take this and make a zone out of that. So that's going to be your technical target. So anywhere around 80 cents, I would say that's your technical target, because, or 78 cents, because that's where the falling wedge was created, right? That touch created the falling wedge, and that's going to be our technical target. We're going to need to break above the golden ratio here. That's going to be very, not the golden ratio, but the golden or the yellow resistance trend line here, because that's what rejected us back at the beginning of September, and we dropped all the way down to the support of the falling wedge here. So we need to break that level as resistance. If you see that happen and you see a back test of support, that's going to be a very bullish sign that we are potentially going to take out our technical target for the falling wedge. And from where we are right now, you do have a very nice potential of having a 65% profit for GLMR. Now after that, I do think we may run back down from here and break down, because we ran into this level here in August. We got pushed back down afterwards. The same thing could happen here. We get pushed back down, and this is a double M top pattern, and you lose that support. Potentially you have a target to the downside, but that's going too far into the future. We don't know what's going to happen after this. We might even break above 80 cents. But I would say that at least 80 cents is what we're looking for if we have some sort of a relief rally at the end of October or in November. So that's going to be it, guys. Thank you all for watching. If I missed out anything important on the charts, please let me know down below in the comment section. Feel free to follow me on Twitter. Feel free to follow me on Patreon, and I'm going to catch you in the next one. Goodbye and good night.